So I just recently made a video that I had a lot of fun with. I hoped it might go viral. And I was even a little worried it might get me canceled. It was the crazy hot matrix that people use in dating analogies, but for stocks. And little did I know when I made that video that there was going to be a perfect example to talk about where we have got a crazy hot meme stock with a lot of sex appeal, literally a lot of sex appeal, that is breaking the internet right now. So here's the story. Sydney Sweeney, the famous actress and model, has broken the internet yet again. She broke the internet over a pair of jeans, like denim jeans. American Eagle launches a new ad campaign with Sydney Sweeney. And the tagline is, Sydney Sweeney has great jeans. And it's a clever double entendre, and it's a spicy ad, a little sex appeal going on there. And while me, a Gen Xer who grew up watching every denim ad ever using sex appeal to sell their product, that was just par for the course when I was younger, to see it go topsy-turvy in today's kind of politically correct world, while a lot of the internet just saw jeans and an advertisement that was fun, some people saw jeans and took the worst possible interpretation of the commercial, and it blew up the internet. And so being the fact that no press is bad press, or bad press is still good press in that vein, in that thread, the stock price has gone crazy. Like it wanted to be GameStop. It wanted to be GameStop's cooler, way better looking, fundamentally sound, dividend paying cousin. And what I'm about to talk about is going to hit your greed glands. I can promise you that. What this video is not, is it is not an advertisement to buy or sell this stock, American Eagle Outfitters. It is simply an invitation for you to think and to learn to think about how you use your money. To learn to think about how an investor thinks, to learn how a trader thinks. And while everybody else out there is arguing about denim versus DNA, the AEO stock price jumped 20% overnight, and it had about 4 times the average trading volume. And so it showed up in one of my swing trade scans. And I also started to see the memes trickling over the socials. But after it showed up in my swing trading scan, I took a look at it. And I noticed that the company paid a dividend. And I noticed that the volume on the stock was pretty liquid. And it caught my attention enough that I did a second look, because I wanted to figure out if this was just a thirst trap that had the potential to go meme stock on us, or if it had some fundamental strength behind it. Now, before you roll your eyes and just call this another meme pump and dump, let's talk about what I don't think this is. I don't think this is, again, another GameStop, another AMC. I don't think it's a pump and dump. GameStop was not a fundamentally sound company. They had some serious fundamental issues. You know, they're a dying company, a dying business model. And the hedge funds could see this. They're thinking like Blockbuster all over again, like this thing's going down. And so they're borrowing shares from the available float and selling them into the market, driving the stock price down. And there was naked short selling going on. And what that means is that they were lending out more shares than there actually were publicly available for trading and investing. They were 140% of the float in short interest. And so that thing was ripe for a short squeeze. This stock, American Eagle Outfitters, has, again, about 16% short interest, so it's nowhere near that meme stock rocket fuel potential. But it has other attributes that are really, really interesting. Now, I'm going to break through and show you the numbers. In fact, I'm such a geek, I actually made a PowerPoint for you. So check this out. You're going to love my PowerPoint. Here we go. Here we are. Sydney Sweeney, American Eagle Outfitter, a little dividend payer. Is it a dividend diva, or is it just a short squeeze opportunity? You tell me. Great jeans here. The share price right now is going for about $14 in after hours trading. It closed around $13.28 today. It pays a quarterly dividend of about 12.5 cents per share, which means you're collecting 50 cents per year. And depending on your acquisition price, at the current $14, that's a 3.57% return on investment. So not too shabby, right? If you bought 10 shares, it'd cost you $140, and you'd be making $1.25 a quarter and $5 a year. You're way too broke to ask Sydney Sweeney out. She's not that interested in you. But if you bought 100 shares, it would cost you $1,400 in cash. And it would pay $12.50 per quarter and $50 a year. And now you have enough income to go buy yourself a nice pair of American Eagle jeans. At least you look respectable, so you might ask somebody out and get a date. If you bought 1,000 shares, you would have $14,000 tied up. And again, you're collecting $125 a quarter and $500 a year. And that's probably enough to set your kids up with some back-to-school clothes. Maybe get some for yourself. And if you went in 10,000 shares large, you'd be into that 140 grand, but you'd be cash flowing $1,250 a quarter or $5,000 a year. And that's just on the dividend alone. Now, that's not too far off of what you could probably do with a rental property these days, and you would never have to deal with tenants or, the plumbing getting clogged or anything like that. You could learn how to income stack and cash flow. Now, again, it's an attractive asset. And you could think of this as an investment, or you could think of this as a trade and maybe take advantage of some of that short squeeze action that's going on. Now, Dividend Diva or Cash Flow Commando. Check me out here. Well, at least that looks like me. This is me in a Texas tuxedo. I asked AI to generate that. It kind of looks like me. I'm dead sexy, I tell you. You could sell cash secured puts and get paid to buy the stock. Right now, you could pull $1.95 per share for selling the at-the-money $14 put for the next 30 days. That'd be a 14% discount on the stock. Right there out of the gates, you'd have a lowered cost base, and that would drive your dividend yield up. Wouldn't guarantee you'd end up owning the stock, but you could sell puts and get paid to buy it and get a tremendous discount. You could also learn to write covered calls. And based off of what I'm seeing on the data right now, you could make a promise to sell the stock at $20 a share, buy it at $14, wherever the price is, turn around and make a promise to sell it at $20 a share. And the option chain for a 30-day contract that expires in August would pay about 35 cents per share for that $20 strike. And again, that's this month, and I can't guarantee that those numbers are going to persist. But imagine extrapolating that data out over 12 months. That'd be 35 cents per month over 12 months. That's an extra $4.20 of income on the year. And again, that's probably going to vary. Could be higher, could be lower. Who knows what the outcome is. Not counting any capital gains you could get or any of the risk that it might be there. This thing could generate 30-40% just based off of the options and income stacking. Now, again, guaranteed, not a guarantee, void where prohibited, and trading and investing involves risk. We understand that. This example falls on that crazy hot matrix. From a fundamental perspective, this stock is attractive. It's stability zone quality based off of a fundamental perspective. And it's volatile, though. So if you don't know what you're doing, this could be just danger zone for you. Way too hot to handle. She's way out of your league. Sydney Sweeney and American Eagle Outfitters is too hot for you. And so, you could look at it as an investment, but it could have some volatility. Now, I've approached it from a date speculate perspective where I wouldn't mind owning the asset, but I went and took a speculative trade on it and have done a tremendous ROI. I'm up about 88% on the position in just 3 days, using a lot of leverage on some expensive options. It's been fun. So I thought that I would break down the fundamentals for you, show them to you real quick, talk about what I see on the charts, and again, kind of bring it home. And again, not an advertisement buy or sell the stock. Let's look at the fundamentals. All right, let's look at the fundamentals here. So I went and popped in American Eagle's ticker symbol into a little platform I use called Finbox, which helps me do fundamental research. And what I quickly learned is that it's a good value. They have a C in cash flow health, a D in price momentum, but that's obviously about to change. They got a C in growth health. They're not a huge grower, but they have a new brand that's growing like crazy. They got a B in profit health and a B in relative value. Some of the company profile highlights are that the management has been aggressively buying back shares. That's great news. That means there's built-in demand, and that can actually drive share prices higher. The relative strength indicator indicates that the stock's overbought short-term. That's true, and I know that. Significant return over the last week. The net income is expected to drop this year. There's, again, some other negative information out there. But it has maintained a dividend payment for 22 consecutive years, and I think that puts it into the dividend royalty categories. They have a strong return over the last month, a strong return over the last 3 months, and analysts predict that the company will be profitable this year, and they've been profitable over the last 12 months. If you look at this here on a one-year chart, the stock price has been as high as 21 over last year, and it's gotten down to about $9, $10 a share where it found support, and it's popped back up. On a 5-year chart, it really hasn't been lower than $10, $11 here, maybe $9 on the low end, but it's got a nice support zone around $10. And over the last 10 years, it's been as high as 36, and it really hasn't gotten any lower than like $6, $7. So you're definitely buying it not too far off of those all-time lows. Again, not a bad deal. American Eagle jeans are on sale. Good way to think about it. Now, I haven't done a complete deep dive on the fundamentals, but what I have done here is I've looked at some of their key ratios. And again, dividend yield, depending on your cost base, is about 3.8, 3.5 as of today because your asset price has gone up. The price to earnings ratio is about 11.7, and that's rockstar territory for a price to earnings ratio. That is awesome. They are a $5.274 billion company in revenue, and their net income to the company is $196.7 million. And another really important fundamental metric that you could understand if you studied it would be that the enterprise value divided by EBITDA, earnings before interest, tax, depreciation, and amortization, is at 7.7, and under 10, that's rock star territory. So fundamentally, very attractive. It's fair to say that this stock, again, has good genes. So that's a little bit about the fundamentals. Now, if we go to their webpage and check it out, they're offering a sale right now, 30 to 40% off of everything. Who doesn't love a deal? And again, popular brand, easy to buy. What's not to love? Very fun stuff. So, hey, speak of the devil. There's Sydney Sweeney. She has great genes. Okay. Scroll down at your own risk. What's that, honey? What? I'm looking at thirst traps on the internet. Investment trades. All right. No, I'm just kidding. I told her about this. She thought it was funny. Okay, so here's the idea. On a weekly time frame, that stock has obvious support at $10. Again, they have a tremendous track record of paying their dividend, and the stock price has surged on way above average volume. On that daily chart, the volume went, I told you it went 3-4 times the average daily volume, and today it was over 10 times the average volume, and it put in over 63 million shares. That tells me there's institutions here. That could be some of that short squeeze mechanics kicking in. And institutional participation, that is not just a bunch of well-coordinated internet buyers, retail buyers. That is definitely institutional volume. So does this mean the stock's going to continue to rise and do a moonshot? I don't really know. What I do know is that the options, again, you could sell a $14 at-the-money put and get paid about $1.95, $2 to get paid to buy it, make that promise to buy it. Doesn't mean you'll actually end up owning the stock, but you're guaranteed to get that money, and you just have to tie up the $14 per share. Each contract worth 100 shares. So if you want to sell one contract, you get paid $200 and go buy yourself a couple of jeans. You could also write that covered call I was talking about. It was a $20 strike. You could pull 25 to 45 cents out of it. I said 35 cents. And again, those numbers could change, but there's the probability of you getting called out is certainly there, but right now it's about 85% chance you don't get called out. So that could be another income stacking cash flow. What I did is I went and bought some November long calls. And these call options were way overpriced. They were more than 10% of the stock price, which is expensive for options. And I bought some $11 strikes for $1.75 per contract, and they were going for $3.30 at today's close. So that would be $155 profit on a $175 investment, or 88% return in 3 days. Again, now I don't know if that money's going to be there tomorrow, if the stock price is going to continue to rise and gap up and be worth more, if the stock price is coming right back down and those option contracts will be worth less. I haven't closed the trade out. I could end up just losing all the money I have per contract. But again, what I did is when I first saw the news hit, the stock price gapped up, and I looked at it, I said, oh, this thing has the potential to go meme stock. I did the fundamental analysis on it, and I decided I was willing to take a little bit of risk, and I opened up a position, and it didn't do that well right out of the gates. It started to go up a little bit, and then it kind of got caught with some of that downward movement from the market last week, and it got even cheaper. And so what I did is I actually doubled up my position and added more contracts as of last Friday, and then today, pleasant surprise, it exploded. Boom. This thing just ripped. And so I have this open-ended risk graph with unlimited upside potential, and if that stock were to continue to rise, I'll be laughing all the way to the bank. But again, guaranteed, not a guarantee. And we talked a little bit about the psychology of the crazy hot matrix. Again, what people want is that instant gratification. They want that get-rich-quick energy. They love that stuff. This stock technically is solid enough to be a stability zone investment where just the dividend alone could pay out. I think the downside risk is nominal. It's there. I mean, the stock's volatile. But that upside potential is also there. There could be capital gains in addition to the cash flow. So it does have some potential. But what matters more than just the stock you pick is who you are. What are you bringing to the table? Do you have the knowledge and skills to manage that kind of investment? Because it's hot. It's volatile. She's way out of your league, bro. So watch yourself. Look, everybody wants that one lucky trade. They want to get that rich, quick feeling. But the people who win consistently, they're not lucky. They're prepared. They've got systems. They've got rules. They've done the work. They can recognize the setups before the crowd does, kind of like I did. And when preparation meets opportunity, again, you better know how to aim before you take your shot. So thus far, this trade wasn't a fluke. The reward has been worth my focus on this topic. I want to caution you to approach these kinds of opportunities with intelligence. But here's the real takeaway. If you don't have a system, some rules and discipline, and you're chasing meme stocks, you're just gambling. But if you're building good habits, knowledge, you understand strategies, you understand risk management, you're developing those skills, well, now you're investing and you're developing that ability to get repeatable wealth. And that's really where the success happens, is your ability to repeat the process and to take advantage of the opportunities when they present themselves. So if you enjoyed this video, make sure you hit the like button and the subscribe button so you can get more of our awesome content. This channel is growing and we're posting more and more and we're having fun with it. And drop in the comments below if you've got experience with meme stocks. We'd love to hear your stories, and let us know if you're on team Dividend Diva with this one or if you're on team Short Squeeze. And last but not least, we salute you, Sydney Sweeney. This has been a fun topic to talk about, and Sydney Sweeney has good genes, and American Eagle Outfitter has good genes, and you know, we can all have some good genes if we can afford to buy new ones. All right, see you in the next video.